All right. Good afternoon, everyone. Welcome today to this AEI event, a conversation on lowering education costs and debt act with Senator Cassidy. It's a pleasure to be here at the Dirksen Senate office building for those who are online watching us. And thank you, Senator Cassidy, for making time for this. I know you got a lot of claims on your time, and appreciate you spending a little bit with us. We have a simple event today. The senator and I are going to have a conversation for about 40 minutes or so, and then we'll have a brief time of Q&A with those in the room here. Those that are watching online, if you'd like to submit a question, you can do so on Twitter. We have a hashtag, which is hashtag lowering education costs and debt. Senator Cassidy is the senior senator from the state of Louisiana. He was a physician before he entered politics for the Louisiana State Senate in 2006. Spent some time in the House of Representatives and then has been in the Senate since 2014. He's the ranking member on the Senate Health, Education, Labor, and Pensions Committee, as well as several other committees. Again, Senator Cassidy, thanks for sitting down with us for a little while.
Nat, thank you, and thank you all for being in the audience, and thank you for watching online.
So to jump right in here, I'd like to start with a little table setting on. From your perspective, how is it that we got here? We are now facing a $1.7 trillion portfolio of student debt. The vast majority of it is held by the federal government. And there's an enormous divide between the parties over how best the government should deal with that. What are the factors that have led us to this situation with so much student debt?
Unfortunately, they're legion. But let's start most proximal. There has been a lot of easy money that people have been able to borrow. They've been able to get degrees which have not been degrees that have paid very much. That may be wonderful if you just wish to study for the sake of studying. That's really nice. But if you're going to pay back a loan and you end up with a degree for which you can either go to grad school and take on some more debt, or you can take a menial job in which you'll earn barely enough to make a living, that's not a very good business plan. Secondly, there was the COVID pandemic, in which there was a pause on debt repayment. So some people just got out of the habit of paying their debt back. And then others took advantage of the pause when they could pay the debt back, but they chose not to. And so this allowed a continued accumulation of the amount that was out there. There's been undoubtedly some universities which have exploited this as another factor, as a third factor, have exploited this, offering degrees and charging a lot of tuition for the degrees on the presumption that at some point the student would either be responsible for it, not the university, and or they could get the debt forgiven, so maybe the student would take it on anyway. So there's lots of factors. I've listed some, but we've got some idea of what root causes are if we wish to start looking at solutions.
So we've had a student debt crisis for a long time. It's not a new thing. I would suggest though that the action on large-scale debt forgiveness, especially being pushed by the administration at really enormous sums, is somewhat new. There seems to be a divide on loan forgiveness that is new now that maybe wasn't there 10 years ago. What's the root of that departure between the parties, particularly on forgiveness?
Well, first I'll point out that if you have a lot of student loans, there's already like 9 different programs by which you can get that student loan forgiven. And since under some of those programs, for example, if your student loan exceeds a certain % of your discretionary income, and so your mandatory income, if you will, would be that required for room and board. Your discretionary is that what you'd have left over to go out to restaurants and to bars, roughly speaking, and just speaking kind of in general, of course. So when you say somebody's got $1 million, no, let me just pick a number, $100,000 of student loan debt, but their income is only $25,000 a year. Really, there's already a program that can help them get forgiveness, and they're not going to ultimately end up with $100,000 in debt. A portion of that will be forgiven. Part of what has driven this is people have ignored the existing programs. And the left in particular is driven just for a carte blanche sort of forgiveness of these student loans. Now, when you do carte blanche, of course, it's simpler, it's easier. Somebody doesn't have to navigate it. They don't have to approve that they are having a problem. So you can argue, again, that makes it easier for them. But they can also be making money and still get debt forgiveness. I've found in Washington that free money is pretty popular. And so when President Biden's up for re-election, frankly, the poll numbers don't look good. He's got people from his left advocating for debt forgiveness. It's very tempting. And I can imagine, not being part of their party or part of their deliberations, that there was a certain amount of political consideration that went into it. Now, Republicans think we ought to pay for this. And if we're going to pay for it, let's first start off with where we are and how much do we actually have to pay for, as opposed to that which can be addressed with existing programs. So I think the lack of understanding, and I think a certain amount of politics driving this, is all combined to create a divide between the two.
So there are existing forgiveness programs or programs that help students deal with their student debt burden. When it comes down to the principle behind the logic for when we should give student borrowers some help, when the government should step in and give them some aid, just from your perspective, what's the kind of principle we use to identify when and to what degree we give borrowers help and when we ask them to carry the load that they signed up for?
So, Nat, you, of course, are asking a question which has three different ways to answer. So let me first by saying this. If somebody becomes disabled or unemployed, well, it's a no-brainer. We shouldn't be saddling them with that debt. If somebody's job turns out not to pay them as they thought it would, in the short term, we should forgive that debt. We should be doing something about educating people before they take on the loan that the degree for which they're signing up is not very good. But that's one of the reforms we're proposing. But I like the current criteria that if it exceeds a certain amount of your discretionary income. There's also a program right now that if you go to grad school and you get a degree and you go into public service, that you can get a portion of your student loan forgiven. I have mixed emotions about that. I want the person who finishes up at grad school to have every opportunity in the world. If she wants to be a public prosecutor, not get paid very much, more power to her. But if suddenly she decides, you know, I started off wanting to be a public prosecutor, but a friend of mine has just returned from business school with a great idea, I'd rather be involved in a startup. I just came back and I visited a place, and their startup is how to take high school kids who are at risk of not completing and linking them up with businesses to mentor them in order to grow them into a person who has a long-term sustainable job in the private sector. That sounds to me just as noteworthy or as somebody working as a public prosecutor. That person in grad school may make that decision. So the fact that a grad school can charge a heck of a lot, and I enter the program saying, don't worry about it, I'll get it forgiven if I go into the into the public sector, I actually don't know if those are really thought through. I think we should, as much as possible, not encourage the grad school to increase their tuition so dramatically, as some have. And secondly, leave the options open for the person who may make a different decision 3 years after starting law school than the day in which he started.
The Biden administration has been pretty aggressive on multiple routes to forgive student debt. It is not something that you have to get the administration to admit to. They wear this as a badge of honor.
He's running for re-election on it.
Indeed. What are some of those proposals that the administration has pushed for or put into place that you find most problematic?
Well, I think the one that the Supreme Court struck down as unconstitutional, in which they were taking a provision narrowly written for those in the military who went off to the first Iraqi war, having to abandon their education and the debts that went with it. They kind of stretched it out to cover everybody. And the Supreme Court called them on it. They said, this is not a minor modification. This is a wholesale kind of, I don't know if reinterpretation, reimagining. It's like tearing down everything but one wall of a house and then making a $50,000 square foot house attached to that one small wall in order to avoid a building code or something. I used to live in Los Angeles and they used to do that sort of thing. So now the latest one is just kind of a boom, we're going to forgive it. So people who are gainfully employed, making good money, who could pay back the principal, they're not going to forgive a portion of the principal. I find that very problematic. I say that because in my state, I got good people. Louisiana, great people. But most don't go to college. Now, they're going to borrow money to buy a house, to buy a truck, to go to work, to get a better job, so the kids go to better school, so the kids go to college, and their kids have the future that they themselves do not have. It's important to point out the Biden administration is not forgiving debt. They're just transferring the responsibility to pay it back from those who willingly took on the loan to those who either paid back their student loans or who never took the loan in the first place. So they are transferring this debt to the people I represent. Again, who couldn't afford to go to college or chose not to and now are working good jobs, good people, but they are shouldering the burden for those who willingly took it on. So this debt forgiveness, which is their latest scheme, is that there is that dynamic, and I just think it's incredibly unfair to all the Americans to whom the debt is being transferred.
So there's long been concerned about college costs, how much college costs and how much we spend on it. What effects do the plans to increase forgiveness have on those college costs and college choices? Do they have none? What does it mean for the institutions and their behavior?
Well, you got a couple things in there. First, does it create a moral hazard that people think they can potentially borrow and not have to pay it back? Absolutely. Would it make them less sensitive to, well, I need to pay it back, so I better be careful what curriculum I sign up for and what school I attend? It could theoretically make them less sensitive to that too. Things that we should be making that future graduate more sensitive to. For the schools, there's no accountability for the schools baked in here. And so if the schools aren't accountable, they're ultimately the ones who at times are selling a product which is not very good. Why do I say that? One thing we may get to later about our College Transparency Act. But there's a university, we've heard testimony in this room, the person from this desk, I'm fairly certain it was Georgia Southern, that says they've got this like 100 points that they follow each student. And if the student is at risk for not completing at a certain point in his or her career, they will step in and intervene. They can see, oh, this child, this student is at risk of not completing. And they found, for example, that there's a group of kids who in their very last semester, if they just had like $500, they could graduate. But if they don't have $500, they're going to drop out and take all the student loan, but without the advantage of a degree. That's a university doing it right. And they say that they have closed the disparities between African-American males graduating and everybody else. And I just say that because black males are the ones who have the lowest graduation rate, but they've closed that disparity. That's a school you want a kid to go to. That's a school which is investing in making sure that the young person actually completes their degree. We need more of that. But unless there's a greater awareness, I got to pay the student loan back, and/or, oh, I'm a university and I want to be responsible if the child doesn't pay it back. I don't think we'll see wider spread adoption of programs such as that.
So I often will critique sort of the higher ed sort of media as if they will only pay attention to loan forgiveness, and so far I've followed exactly my critique. So I want to ask you about the Lowering Education Costs and Debt Act, which you brought up several things that just simply sort of forgiving student debt really doesn't address. The act is 5 separate bills that tries to address a breadth of things. What is that act set out to accomplish?
It sets out to make the young person an informed consumer as to what is the best place for he or she to get their education, not just the school, but the curriculum, how much they're going to have to borrow, how much they'll earn, and that when they borrow money, to have an offer sheet that they can compare between different banks and lenders. And at the end, if they run into problems, to have a simplified format by which to seek forgiveness of that. So we're on the front end all the way through the process of the back end, trying to correct the underlying factors that have created what you asked about in the first question: what was the precedent for this crisis to begin?
So you mentioned the College Transparency Act. Yesterday there was a story in the Post about, I think it was about 360 colleges who had signed on to this voluntary agreement to make a uniform financial aid information packet for students so they can kind of compare apples to apples when they're making comparison across these 400 districts. Now that's just a fraction of all the universities in America, but it's a voluntary action to do something that's somewhat in line with the College Transparency Act. Given that, do you think that kind of voluntary work by these universities suggests that maybe there's less of a need for that law, or maybe underlines the reasons why the College Transparency Act needs to be passed?
I think it's a good idea, which is beginning to flower. Do I think every single university will adopt it on their own? Absolutely not. Let me tell you first what one of the bills is doing that which we're proposing. It would say, okay, whatever I look like in the mirror, I look at myself in the mirror and I am an Hispanic female, I am a white guy, I am a black guy, I'm a whatever guy or a gal. Whatever I look at, including what is my background, rural, suburban, inner city, whatever. I can look at this university, whatever that university is, I can see if I enter this curriculum at this university, someone who looks like me, what is my likelihood of graduating? How much money will I have to borrow? And when I graduate, how much will I owe, and how much will I earn, and how long will it take me to pay it back? Now, that's making it very personal. So it may be that a university does really well at graduating you, but you're going to graduate in something which you're going to borrow a lot of money, and you won't make a lot of money. Maybe I wouldn't choose that after all. But if I start off at my local community college, and I've learned that I can transfer the credits to the local state college, and if I'm studying engineering, I'm going to end up borrowing $40,000, but my first job when I get out is going to be $105,000, and 10 years later, on the average, I'll be making $190,000. Well, I can handle that one. And by the way, did I tell you that if I go that route, I've got a 90% chance of graduating in this curriculum? Now, that would be something that you would hope the young person would be interested in going into. We think that gets at root causes. People who take a curriculum and they graduate and they suddenly find they don't have a job. There's nothing marketable. And by the way, they borrowed $150,000 to get there. So we think our College Transparency Act, which by the way, Elizabeth Warren is co-sponsoring with me, so this has support across the political spectrum, is something which can help address the young person's need and help address one of the root causes of how we got here today.
So I hear you talking about this, and a lot of it just revolves around equipping students at the front end.
Yes.
With the information they need to make good informed decisions and be a little bit more strategic about it. My question to you is about institutional behavior on this. One would think, if you had good market operation, that these schools would have the incentives to do that. Is it that we've gotten here largely because that decision-making process has just been ill-informed and colleges haven't done the work of making sure students have informed decisions at the outset?
Well, I don't, in a sense, you're placing blame someplace. And it may just be that we just got a poor system. Someone points out, and many of us have taken mortgages, you go for your mortgage and there's a standard offer sheet. So if I go to Citibank, or if I go to First Bank of Louisiana, or if I go to JP Morgan, I'm going to have the same offer sheet. So two of the reforms we're proposing are some variation on the theme of just equipping the young person with the same offer sheet. What one university may call a grant, another would say, no, this is a loan which you must pay back. But we're talking about the same pot of money. And so I can't blame that on anybody, except that you have to make sure that everybody's speaking the same language. And just as that potential home purchaser is equipped to make a better decision by a standard format, and that standard format has been mandated by law, similarly, the prospective student would be equipped to make the best decision about where to go to school and whom to borrow from, and that would probably have to be mandated by law.
And of course, some of those decisions are for about as much as you would pay for a mortgage. So we're talking about serious amounts.
And
of
by the
money.
way, we're talking about not always, because we have a lot of students who are older now, but it could be someone who is 17 years old, whose family comes from modest backgrounds, and who's never had access to this kind of free money. And I remember when I was 17, the idea that one day I'd be 65, I'm like, I couldn't believe that. No way. And the idea that I could be 21 when I was 17, well, I guess I could believe that. But the consequences of the decision I made when I was 17 were not as real to me. So hopefully this offer sheet, by saying this will be your first payment and that's what's going to happen, will bring the reality of that decision you're making up close and personal. Because I think a lot of folks just say, oh, it's free money. I'll pay it back, but I'll pay it back in the by and by.
So one of the pieces in the act specifically targets some problems with graduate debt. And oftentimes we think of student loan debt and we think, well, you know, kids go to college for 4 years and then they have student loan debt. But a really huge chunk of all federal debt is graduate debt.
Yes.
Why is it important to sort of focus in on that graduate debt and the parameters around it specifically?
Yeah, so some of that graduate debt, the undergrad debt typically, the undergrad debt typically, or oftentimes, is of a relatively small amount of money. But the grad school debt can be of a lot more. Now again, there are forgiveness programs. If you go into public service, you can have that substantially forgiven. But it limits the possibilities of that graduate to only public service. It also limits how much income they can earn, because if they earn too much, then they may not be able to access the debt forgiveness program. It is putting a governor, if you will, a valve upon future earning potential. And frankly, upon future creativity. Now, I was in public service my entire life. I worked for LSU Med School teaching med students. And so I believe in public service. My wife started off there, and then she went into private practice, and she did fantastic. And bringing leading edge practices for the treatment of breast cancer to our community. So if you had limited my wife by saying, no, you can't leave public service, you're going to be here forever, there would have been a different standard of care for the patients whom she saw. And by the way, she ended up influencing the entire community. That's just the example of my wife. Imagine all the examples across the nation of people who are almost indentured to public service, not because they would really choose to be there any longer, but because of the amount they were charged in grad school. And the only way they pay it back is by one of these, okay, if you work for public service, we'll forgive the debt. I'm about opportunity. And I think part of the problem with our current student loan situation, it limits opportunity. And most of you all in this room are pretty young. In fact, everybody looks pretty young compared to me. And so I am so sensitive that the greatness of our country is dependent upon you having as much opportunity as is possible, and then the opportunity to seize that opportunity. Right now, student loan has become a shackle on many people's lives, keeping them from achieving that which they could, once more, not just for themselves, but for all of us.
One more thing I wanted to draw on, the Streamlining Accountability and Value in Education for Students Act, or the Save for Students Act. It is part of the plan, and it focuses on the current repayment systems that are, as you said, there's several to choose from, and they're kind of complicated. Why is this worth some simplification?
So this is from John Cornyn. Right now there's 9 repayment plans, and as we mentioned, a lot of people don't take advantage of them. They're like so complicated, they just don't take advantage of them. So we think that if you simplify them, narrowed it down to 2, then it would make it easier. I think it's a general principle that, in fact, there is a concept in behavioral economics that the more choices you give somebody, the harder it is for them to make a decision. And we always assume more choices is better, but it turns out the fewer choices. So if you're able to simplify those 9 down to 2, you could argue it won't be quite as nuanced for this person, but I can tell you a lot more people will take advantage of them. And we feel like that is a way to address those folks who truly need student loan forgiveness.
Now, one of the provisions that I think is included in there is that the Department of Education, the administration, can't promulgate another repayment plan without congressional approval. And the Biden administration has their own SAVE plan, which is changing income-driven repayment, which is going to be a pretty expensive program over 10 years. How do you see Congress's job, period, but also Republicans in Congress, as they're pushing back on this, as their responsibilities, particularly to just assert themselves, particularly in the loan repayment and sort of forgiveness arenas that the administration's pretty active in?
So I think Congress should assert themselves. Our founding fathers didn't say, oh, Congress, give a blank sheet of paper to the executive and ask them to do whatever they wish at the political moment. They said Congress shall pass laws and the executive shall execute. Now, I'm told that 30 years ago, the provision that the White House is using was framed very broadly. And for 30 years, it kind of stayed in place and everybody was okay with it. But the administration is taking this very broad framework and suddenly, for those listening, not watching, I just stretched my arms widely. And they expanded the aperture tremendously of that which is allowed to happen. I don't think that was the way it was set up. In fact, I know it wasn't. I would have preferred Congress 30 years ago would have said, these are the things you should consider. These are the limits upon that consideration. We need to give you a little bit of adjustment, a little bit of latitude. There's factors we cannot imagine. But on the other hand, it is not a blank sheet of paper. And if you wish to change the program substantially in the future, then you need to come back to Congress and ask for the authority to do so. Why is this important? Aside from the fact that I think it's the way our Constitution was written, the estimates at this current plan is that it will cost $559 billion. $559 billion. Now, theoretically, it's going to be the House of Representatives that is supposed to authorize spending plans like that. This is a spending plan effectively created by the executive. We are undermining our Constitution on a regular basis. And where does it stop? Roy Blunt used to say that the last thing that was done by the last, how do you quite put it? That which was last done now becomes the accepted norm. Are we really going to have an accepted norm where consistently the executive is writing legislation costing us hundreds of billions of dollars at the same time that we're trying to combat inflation, that we're trying to get our debt and deficit under order, that we're trying to fill in the blank? I just think it's bad governance. I think it's unconstitutional, and I think that it's something that Congress should weigh in on.
Of course, I think everybody is well aware that the Supreme Court overturned the student loan cancellation plan by the Biden administration, but Congress hasn't been unable to push back on some of the administration's efforts, right? I mean, you've had some success doing that. What are the things that some people might miss that have been done over the past?
Well, we passed our Congressional Review Act. But, the president's not going to sign that into law, right? Period, end of story. And so it is a message, if you will. It's a statement. It's a strong statement. But it doesn't have the effect of stopping his action. And arguably, I'll just go back to it. Since it doesn't attack root causes, since there are arguably other programs that could be put in place, since there's people benefiting who actually have the ability to pay back their student loans, and since it just so happens the president's underwater politically, so your suspicion is he's doing it for political purposes, this is the kind of activity we should avoid in our body politic.
I'd like to ask you about the pandemic payment pause. Now, this was started during the pandemic. Payments were paused for 40 months. That's a long time to not pay anything on your student loans. It was incredibly expensive. We were interested in accrue during that time. It was extended by Congress. It was extended by President Trump several times, by President Biden several times. Looking back at that, just what's your take on it? Did it last too long? What do you make of this extended payment pause?
So the origins of it, life has lived forward. You can say in retrospect, maybe we shouldn't have done it at all. But at the outset, we had no clue what was going to happen when the economy was shut down. The initial, we just have to help people who are in need, was a worthy ambition of both parties. And President Trump's passage of that, and the Congress conceiving of it and him signing into law, I should say, I think was a good thing. It clearly extended long past when the unemployment rate was down to 3%. And the economists would say it injected another $5 billion a month into the economy that otherwise would have been paid back. So arguably, it hastened the onset of our reaching our debt ceiling limit, and it also contributed to inflation, increasing the money supply, money that would have come back and been folded away instead was spent on the street. And to the degree at the end of it in which interest began to accumulate and people still weren't paying back their loans, it made their personal situation far worse. So I don't know when it should have been stopped, but it should have been stopped far sooner than it was. When people were able to go back to work, the unemployment rate was low, and yet nonetheless, again, cynically, I think for political purposes, it was extended far beyond the immediate need.
Anybody listening to this conversation, if they're approaching decisions about taking student loans, might come up with a pretty negative view on student loans. Student loans are bad, avoid them at all costs. You've been through this. You have 3 children. They've been to college, I believe. When just speaking to the American public, what would you tell them about how to think about student loans? What's the appropriate perspective?
You should only take out the amount that you're going to need to graduate. You should look for value in your education, including finding out if someone who looks like you is going to succeed in the curriculum at the university which you're choosing. Don't be so persuaded by the glossy folders that are sent you, but be persuaded by what they tell you. What is my likelihood of graduating in this curriculum at this university in how many years? How much will I have to borrow and how much will I have to pay back? And then ask them to explain whether everything is either a loan to be paid back or a forgivable grant. Now, right now, that's not a standard format, but that's what everyone should do. It has long-term implications. It can make the difference between you being the entrepreneur, living the life you wish, or somebody who is saddled with debt, which they otherwise cannot do anything else but address that debt. And I want everyone to have their opportunity.
So we're going to turn to Q&A here in just a couple more minutes, so folks in the audience gear up. Last question from me. I know we have the Lowering Education Costs and Debt Act, which is going to sail through Congress any day now, no problem. Aside from that, just assessing the state of play and working forward, what other things do you think we need to pay particular attention to get the broad range of higher education policy that Congress should be attending to looked at? What other things are on your dashboard?
Well, aside from student loans, you mean?
Yeah.
I think it's really intriguing. What is going to be the role of AI in education going forward? I think that is a huge issue, and I don't think we really understand. I don't have a clue about it. I went on ChatGPT to see if it could tell me, and it really couldn't. So I think that, and when we survey people, there's some who are playing with it, but it doesn't seem like there's a systemic analysis of how it's going to be used yet. Secondly, I'm very interested in the issue of dyslexia, and 20% of us in this room are dyslexic. So how do we address that child's need both to be screened, to be accommodated when she is in the primary and secondary school, and then extending into college? Colleges are getting better about giving accommodations for dyslexics, but the degree to which a child does not reach his or her potential because of dyslexia, something which can be accommodated for, but it's not being, is the degree to which society is losing. Two that immediately come to mind: AI, and how do we address issues such as dyslexia on the higher education scheme?
Well, I have lots more questions, but we have an audience who I promised some time to. I have 2 rules when we do questions. Just give us your name quickly, and then the second rule is ask a question. I think we have a microphone in hand.
JP Hogan. the power of the purse of Congress. Seems when they knocked down his first attempt to do this, it was ignoring Congress's power of the purse, whereas the administrative state has come in and so much is going, just rolling through. How much is the power of purse supposed to relate to inflation too? If he's causing inflation, shouldn't Congress say, well, we have to reconsider the cause? Does Congress have the power of the purse over the real costs of a program? They can't just approve a program, then whatever the costs are is a random faction. So does the Congress restore its power by saying we are responsible for the real costs of the program after inflation?
I think Congress should. Now, it's obviously more difficult for an issue such as student loans because you cannot predict on the front end the demand. And the demand is driven not just by what the universities charge, but also by the number of kids who will take it up. But just as a general principle, I think to responsibly govern, Congress needs to think about how much a program costs and to anticipate that to an extent, and then place limits upon what the administration can do to expand that cost basis. I say that because we all understand mandatory spending is a huge issue. So Congress routinely puts in things which are open-ended in terms of obligation. And so I get that if you're talking about Social Security or Medicare. But we also can see what happens to the country's fisc by not thinking that through. Okay, we know that this many boomers will be retiring at this rate and 10,000 a day, and this is going to be their anticipated drawdown of benefits. So let's plan for that. We didn't plan for it. Now the programs are in danger of becoming insolvent. So as a general principle, I agree that Congress should anticipate that and pay for it up front and/or limit how much could be spent in a program, of a different sort than Social Security and Medicare. Yeah.
So my name is Tommy Stevenson. Given in the last several decades, I know inflation is one aspect of this, but not inflation itself with the monetary supply, but inflation of many more administrative positions at colleges and universities. I know there's not as much that Congress can do, say, with private schools, but with state schools, is there any other regulatory means of possibly cutting down on administrative positions, because that's also a contributing factor to higher education costs?
Yeah, so it seems like different states have been trying to do that to their universities. I would hesitate for the federal government to go after that and would rather, in our federalist system of government, a state decide whether or not they were getting adequate value for the amount of state money being invested. So just my kind of take on that. But your point is well taken. The amount of money going to the classroom is less now as a ratio relative to the amount going for administration, and that's changed a lot over the last couple decades.
Jalen Brown with Bloomberg. Student loan payments are starting again next week. Do you have any sort of concerns about that, especially as it seems like a government shutdown is likely? And I'm also wondering, are people confused about payments starting at all, and who's to blame for that?
Great question, Jalen. Great question. We had a call last week with the Department of a meeting with the Department of Education regarding their plan, working with the student loan servicers for the repayment policy. As you might guess, there's going to be a lot of questions. They're doing a very aggressive outreach, so they tell us, to remind people that they have to pay them back. There is a program where if somebody doesn't pay back, at some point the agency has to report them as having not paid back, which has an impact upon their credit score. They are going to wait a year before they begin to enforce that, which means that the interest will continue to accumulate for up to a year. Now, I can just tell you, if you haven't been paying for 3 years, it's going to seem mighty easy not to continue to not pay, except you're going to have interest continuing to accumulate upon the money that you borrowed. And it's going to be even more of a drag in terms of your future opportunity because of that decision. So personally, I think that giving someone 12 months is no better than giving them 6 months or giving them 4 months. It is a false compassion to say that let's give you a little extra time. I'm sure you'll make up your mind by then. I think it's a total false compassion. Secondly, there's still a lot of issues in terms of the servicers being prepared to take this influx. Now, they say they don't have enough money. I'm a little frustrated by that. Well, we didn't know when it was going to happen. We didn't know when it was going to open up, and this and that. From my perspective, the Department of Defense does not know if a war will ever break out with Taiwan. But for 20 years, they've been preparing as if one was going to start tomorrow. Now, you can argue that they've ramped up preparations, but the point is you game out what's going to potentially happen so that when it's ready to happen, you've got it 95% ready to go. And it doesn't appear that the Department of Education has done that. They say they've done some preparation along the time, but that just is inconsistent with telling us that they're otherwise unprepared. But nonetheless, they're going to continue to have conversations with us, and I hope that I'm proved wrong.
All right, well, Senator Cassidy, I had to switch onto this mic. I think your staff made me promise to get you out on time, and they're doing their jobs well. I really want to thank you for spending some time talking with us about these important issues, and really appreciate your perspective and efforts on it.
Thank you, Nat. Thank you all.
All right, to everyone. Preston, thanks for joining us. On his left is Claire McCann, higher education fellow at Arnold Ventures. Claire provides expertise and strategic advice as a fellow for the higher education team there at Arnold. Before joining Arnold, Claire worked as a senior policy advisor at the U.S. Department of Education for issues on higher education. And she also worked with New America's higher education program before that. And then finally, Michelle Dimino, the Deputy Director of Education at Third Way. Michelle is at Third Way, where she works to elevate value and return on investment in national higher education debates. So Michelle, I'm gonna actually start with you. And again, I've been over this before. The ground rules are don't answer my questions, just jump in. Or don't wait for a question from me, just jump in. But let's start out with a lightning round on the Lowering Education Costs and Debt Act. 90 seconds. What do you think are the most productive proposals in the package? What do you think are the most problematic? Michelle, I think you're gonna have to hit the talk. There you go.
There we go. Thank you so much, Nat. Two of the bills in this package, the College Transparency Act and Understanding the True Cost of College Act, are bipartisan in both chambers of Congress. They're really common sense measures that get to the heart of what students need to know as they're preparing to make important decisions about college. These are efforts that are really popular, that are very intuitive to folks, that make a lot of sense, and have support across the aisle. So they have the clearest pathway forward to become law and would have tremendous impact on students and their families if they were to become law. So I'd say that they're definitely in the productive camp. In terms of a little bit more problematic, the Save for Students Act does include some really interesting provisions around how we think about earnings outcomes and whether that should be a part of this decision making around what programs are eligible to receive federal student loans. There's also a proposed income contingent repayment in there that would look tremendously different now given the context that we're in presently, where the Biden administration's SAVE plan has already gone into effect and already has student borrowers enrolling in and benefiting from that plan. So when we think about introducing another plan of that nature at this time, that's something that would be really confusing to borrowers and I think could be very disruptive to the system.
Claire, same question.
Thanks, and I'm gonna largely agree with Michelle on a lot of that. I think the bipartisan commitment to transparency is really important. These two bills, the College Transparency Act and Understanding the True Cost of College, are embracing ideas that have been around for a little while now and that have continued to build in momentum. And I think the other accountability pieces of the package are serious efforts to address some problems that we all agree are problems, I think. You know, the growing sense that higher education programs are not always producing the kind of value that we expect them to produce, and the ever-increasing problem of spiking graduate student loan debt, which is costing both students and taxpayers. Those are problems we can agree on. I think, of course, the devil is in the details, and there are lots of questions about how to implement those changes in a way that's going to ensure continued access for students. But I think overall what this package showed is actually how much agreement there is on the nature of the problems.
Preston, your turn.
I want to echo a lot of what is said. I think it's great that there's such a bipartisan commitment to college transparency. As you mentioned, it's both Cassidy and Senator Warren who are on the College Transparency Act saying, students need better information in order to make informed decisions about their college journey. I don't think that transparency alone is enough, though, and that's why I'm very excited about some of the other provisions in the package as well, which would actually try to put some constraints on federal borrowing, because up till now, the federal student loan program has basically operated under the implicit assumption that higher education kind of always pays off, that it's always a great deal no matter how much you borrow. Right now, if you're a graduate student, you can borrow an effectively unlimited amount up to the cost of attendance as defined by your institution. And there are effectively no guardrails around what the outcomes of these programs are. So you can have a student who's borrowed $200,000 in debt and is earning poverty level wages, and the program that produced those outcomes can continue to get federal student loans, basically no questions asked. So I'm very excited about the number one, the proposal to basically kick some programs out of the federal student loan program if their outcomes are very poor. So if your graduates are earning less than the median high school graduate in your state, that program is going to be no longer eligible for federal student aid. Same with graduate programs. If your graduate program is producing outcomes where students are earning less than the median bachelor's degree graduate, that program is no longer going to be eligible for loans. I'm also very excited about the fact that the proposal is actually putting a common sense cap on graduate student lending. We're saying you cannot borrow an unlimited amount from taxpayers anymore. We're actually going to cap that at a common sense level so that we are not ending up, students are not ending up with $200,000 of debt and few job prospects.
So, Michelle, I wanted to follow up. I think you mentioned the College Transparency Act and that it's bipartisan. How well do you think that, how far would that bill go in improving the information students have? I mean, that it's very difficult to actually get information into students at the point of decision. How much mileage might we get out of that?
Yeah, I would echo what Preston said. Transparency is important. It's also a starting point, but we do know that everything starts with transparency, with having the data and information available for folks to avail themselves of. So in that effect, the College Transparency Act would be a real game changer in providing students and their families with usable, accurate, complete information on what their outcomes might look like from attending a given program at a given institution, which, as Senator Cassidy highlighted, is currently very hard to impossible to do, to consider how those outcomes might play out for you personally. Right now, if you're a student and you're considering a few different college options, you can take a peek behind the doors A, B, and C, and get a sense for what those outcomes might look like, what this program might cost me, whether I may complete, whether I would go on to earn above a high school graduate or what I might make in that career. But the information that you have is limited, and it isn't representative of all students going through the higher education system. So the College Transparency Act would really open that door wider for students and their families to be able to have actionable information to inform their decision making and be able to make the best decisions for them in their circumstances.
And I'll invite you again to just pop on in if you have something to add, but I'll ask another one because I think it ties right into that. On the Understanding the True Cost of College Act, look, this is asking for some sort of parallel information from institutions, and a lot of times I think you're going to get institutions that will cry, oh, we can't do that, we can't do that. Can they do this? I mean, is this too much of an institutional ask?
Please let me take that one.
Go for it.
Institutions can do this. They should do this. I completely agree. You will hear institutions say, but our college is unique and we couldn't possibly fit into a form. But the reality is that students need to make decisions based on the information that they're getting. The GAO did a report on financial aid offers last year. They found more than 90% of the schools they looked at were either understating what the net price was going to be, what students were going to be expected to pay, or they left that information off of these financial aid offers completely. That is an unacceptable lack of transparency for one of the most expensive decisions students are ever going to make in their lives. And so, you know, colleges have been a big block to this. They have made this very hard. We've tried voluntary initiatives like the one you were talking about earlier. We've tried the college financing plan from the Department of Education. This must be standardized, it must be a template, and schools need to comply with that.
I would add that this lack of price transparency is in itself a driver of the cost of college. Because think about it, you know, from the student's perspective. Say you apply to college, you don't know how much it's going to cost. You actually have to get into the college before you get a very confusing award letter, a very confusing financial aid offer letter, and maybe then you'll be able to decipher how much you're actually going to pay for college. But you have to take all those steps to figure out what you're going to pay. And so that makes it basically impossible to kind of compare prices between different colleges because you don't actually know what the price is going to be until you apply and get in. And colleges, you know this. It's actually $1 billion consulting industry for colleges to take all this information about a student and come up with a price that they think the student is going to be able to pay based on all these factors. You know, I have a friend who was applying to one college, and the college asked them about the make and model of the cars that her parents drove to figure out how much money they had, you know. And so it's really a, you know, it's a feature, not a bug of from college's perspective. The fact that they have so little price transparency because they think that lack of transparency is going to enable them to get away with charging higher prices.
So Preston, what I hear you saying is at the point of decision for colleges making financial aid offers to students, the colleges are information rich, but at the point when the students make the decisions, they're information poor. Is that right?
Yeah, I think that's a very fair way of putting it. The colleges, you know, have a huge advantage because they get all of this information about the students, but the students really don't get that much information about the prices that they're going to be charged, and that makes it basically impossible to comparison shop among colleges the way you'd say comparison shop for a laptop.
The Save for Students Act, which is, you know, it's named SAVE, just like the program for IDR, and the GOAL Act seem to be the most contentious bills. I don't know if you agree with that. Will the provisions they include address real problems, and are they worth the fight they might require?
Yeah, I think that both of those bills, I understand why they're contentious because you're not just increasing transparency, you're making real policy changes to the student loan program. You're actually limiting the amount of federal loans that can go out the door, and you're imposing some real outcome standards on colleges who are trying to participate in the federal student loan program. I think the changes are very much on net positive, but it's true they are going to be a heavier lift because you are making real policy changes to the program.
And I agree with that. I'll just add, I think, you know, the goal of the SAVE accountability provisions is to hold colleges accountable for offering programs that provide real value for graduates. One thing that will help to counteract all the challenges that we can expect colleges to raise in response to this is that is something students and families want out of college. That is something people are looking for. That is the primary reason people are going to college is because they want to get a better job. They want a career advancement. And so they want to know if they will likely be better off for having attended this program than if they'd never gone in the first place. And I think also this is an area where we're seeing some growing consensus. So the Department of Education put out proposed gainful employment regulations a couple of months ago. Those included a very similar measure of basically, are your graduates better off for having attended the program? And I think that consensus gives me some hope.
I would say too, while these bills might be the most contentious in the package, in a lot of ways it's good contentious because we are seeing agreement on what the problems are and sparking some conversation around what the policy solutions may be, even if these as written are not what we ultimately reach. I think the GOAL Act in particular is really hitting on a problem that has been continuing to gain attention and policy focus, which is the tremendous cost of graduate school and the limited information on how well that's actually paying off for students. Right now, under current law, the cost of attendance, which is a number number set by the institution for what it's going to cost a student to attend is the only real limit on what students are able to borrow to attend graduate schools. There's a tremendous lack of accountability in that process and in what that looks like. And we're seeing increasing agreement that that's something that we really need to address and that we need to in some way be considering how we're allowing the cost of graduate school to balloon and how we're ensuring that schools are actually held accountable for making sure that that experience is paying off for borrowers. So there's certainly different solutions to be discussed around how we might ultimately get to a point where there is greater accountability for, but these bills really are addressing true problems that there's increasing consensus that we need to find solutions to address.
And on the graduate debt piece, I'll just add, another area where I think there's a lot of agreement in the field. The chief economist of the Department of Education put out a report on graduate student debt, raising a lot of the same concerns, pointing out already graduate student debt is about 40% of the loans that we give out every year. Graduate borrowers are like 1 in 5 students. And so we're startlingly close to the point where graduate loans are going to make up most of the loan volume we give out every year. And so I think, between that and increasingly generous loan policies that are making these loans cost more money for taxpayers, the only group that graduate student debt still seems to really be working for is the colleges, many of which, can use those programs, those loan programs as a cash cow. So there may not be total agreement on how to address the problems, but I think lots and lots of agreement on what the problem is.
Michelle, you mentioned the cost of attendance, and there's some things that I think some people that are thinking about these things as consistently as you are take for granted, but that cost of attendance includes just living costs as well, which is part of the reason that you can borrow quite a bit of money when it's not just tuitions and fees and so forth, but it's also cost of living. Does that cost of living substantially jack up the amount of loans that you think graduate students are taking?
I think it can depend. What really it comes down to is that the institution is the actor responsible for setting that cost of attendance figure, which is then used to dictate how much you are able to borrow for graduate education. So to that extent, that's putting a lot of power in the hands of institutions to be setting those limits and setting their students up for different levels of success and being able to repay those loans. Of course, it's true that living in different areas of the country come with higher expenses or lower expenses, but on the whole, for that to be the only lever that's dictating how much you can borrow to attend graduate school has its flaws.
I'd also add to that just a quirk of how the system works means that past a certain point, you actually have an incentive to borrow more, because if you pay your loans back through income-driven repayments, if you reach the point where your loans are going to be forgiven, as in the scheduled payments that you're going to make are basically not going to cover the full balance. If you're in public service, that'll be forgiven after 10 years. If you're not in public service, that'll be forgiven after 20 years. That means that the marginal dollar you borrow after you hit that forgiveness mark is essentially free, because it's just going to get forgiven anyways. And so a lot of colleges have figured this out, and they're starting to whisper into their students' ears, you can actually borrow as much as you want because it's just going to be forgiven by taxpayers. And some schools, especially law schools, have told students, just take out as much as you want, pay our very high tuition rates, borrow a lot for living expenses too, and it's all just going to get forgiven by the federal government.
And so, Preston, just to repeat that back, because I think this is important, and correct me if I get this wrong, if you borrowed $25,000 and then at the end of this period with public service loan forgiveness, you got $2,000 forgiven. So you spent down $23,000. But if you had borrowed $50,000, then you wouldn't get $2,000 or proportional amount, you'd get $27,000 forgiven. Is that correct?
That's correct, because under income-driven repayment, your payments you actually make on your loans, they're based on your income. They have absolutely no relation to how much you borrowed. So whether you borrowed $25,000 or whether you borrowed $50,000, as long as you're hitting that forgiveness mark, that 10-year mark, you're going to get the rest forgiven no matter how much you borrowed.
So I want to talk a little bit about the state of play and how policymakers are addressing these issues, but also I think part of this context is, and Senator Cassidy talked about it to some degree, is how aggressive the Biden administration has been on the forgiveness front and what that means on these things. So the Supreme Court overruled the $400 billion blanket forgiveness proposal, the IDR reform, The senator used the 559, which I think is the high end of the Penn Wharton estimate, but it's $500 billion. It's a lot of money by any measure, and the administration is continuing to try and get sort of back on line with the blanket forgiveness. Just in terms of the politics of this, how tough does that make the ideas and the work on the Lowering Education Costs and Debt Act, or the issues that they address, how much does that sort of unilateral hard push by the Biden administration make getting anything across the legislative finish line difficult?
I mean, I think getting anything across the legislative finish line, including spending bills, seems hard anyway.
Fair enough.
I'm sure it doesn't make it easier, but what I do think that does is raise some urgency around these situations. Everyone has different perspectives on the right way to handle the existing backlog of loans. But I think where we can see some room for agreement and some growing amount of agreement is with respect to what we do for new loans. What are we doing for students who are starting now? How are we making sure we don't end up back in the situation that we're in, paying the prices we're paying for graduate tuition, leaving people with debts they're never going to be able to afford? And so I think there's more room for agreement in that space.
I'd also add that, back when the student loan program operated a bit more like an actual loan program where most people were paying back their loans, the CBO would score the student loan program as a profit center for the government. They'd say for every, dollar of loans you lend out, you're going to get 10 cents back or something like that. And that's going to be a profit for taxpayers. Under this new income-driven repayment plan that the Biden administration has put forward, there's no way that's going to be true anymore. Student loans are going to be a major money loser for the federal government, and that's weirdly going to make the budget math on some of these reforms look a little bit better. If you want to, say, limit graduate student debt to $20,000 a year, which is what the Cassidy bill proposes to do, suddenly that's going to look like it saves money in the federal budget rather than costs money. So if you're looking for savings, as we are right now, suddenly that's a reform that looks a bit more palatable.
And I think what we see in this package is that the two bills that have bipartisan support really focus on the need for higher quality and more useful information for students. And that's a really good starting point for that bipartisan consensus that can be built on in considering the types of proposals that are in these other pieces of legislation as politicians continue to come to the table and be debating what the solutions are to these big problems. So it really is a moment of opportunity for both sides of the aisle to be discussing those challenges and how we meet them.
So this may, we frequently hear the call for, colleges really need to have some skin in the game, right? Skin in the game, they need some skin in the game. Is there anything in this package that helps put colleges' skin in the game, or is that sort of in the next time HEA is authorized or some future event?
I mean, I think the other thing you hear is everyone has a different view of what skin in the game looks like. And so I think what this does do is put institutions really on the hook for making sure their programs can meet basic standards. And so, it may not look like the traditional risk-sharing model that we talk about where a school is, signing on to a student's loan and they're going to pay back part of it. It may not look like that, but I think it accomplishes a similar goal of having institutions care what the outcomes of their programs are, and having institutions pay attention to something they've never technically had to care about, which is, did it pay off?
So you're talking about return on investment. This is something we're all concerned about. It makes me wonder about sort of what is the decision-making process that we've sort of developed as a culture, right? I really like the saying, culture eats policy for breakfast. And that happens a lot, and we have students who are in this culture of decision-making around colleges that, gets developed over time. And these habits don't tend to be centered on, strict ROI decisions. It's much more, sort of, this looks like a good idea, and I'll make my decision based on that. Part of that is maybe the information wasn't there to do that, but I wonder on the sort of, just the assertion that ROI isn't that central to most students' decisions. If you think that's true, and if you think that these are prerequisites to changing that, or maybe these kind of measures don't actually get that much traction because this may be a culture of decision problem instead of, limits to information. What do you make of those concerns?
Well, so if you look at polls and you ask students, what is your main reason for going to college? The number one reason in basically every poll is, I want to get a job and I want to increase my earnings. So I think that students do go to college because they want ROI. They want a return on their investment. I think the issue that we've run into is that, the responsible adults in students' lives have told students, all you need to do is go to college. If you go to college, then everything is going to be fine. You're going to increase your earnings. Everything's going to be wonderful. And, the data shows that college does pay off for the average student most of the time, but that is not universally true. We mentioned the dropout issue. A lot of students are not graduating from college. They're not getting the benefits of the degree, but they may still have the debt. There are a lot of programs out there that, just don't provide the return on investment that students would expect, especially if they're paying, tens of thousands of dollars for that degree. So I think that, students do care about ROI, but it's
piece in the Post yesterday about the College Transparency Initiative, I think it was, and there's a lot of big systems. I mean, SUNY and CUNY are in there, and the whole Georgia system and the California state system, a lot of universities, all committing to trying to, let's give some uniform information on what these A letters are like so they're comparable. I asked the senator, does that suggest that we don't need this as much, or that we actually, that's why we need it, because we only have so many on here? What would you say as to that? And I'll ask further, are there some universities or colleges who may want to do this less than others? And I'm not asking you to name names, but let's talk about broad swaths.
Sure. I would agree with what Senator Cassidy said, that this is always exciting and welcome to see institutions of their own volition wanting to share more and better information with students and prospective students who are considering their programs. But it also underscores that you'll never get a complete list that way, and that having a standardized federal way of approaching that is the best possible route to ensuring that students have information that they can compare in an apples to apples fashion. I would say yes, there would be some institutions that may be aware that their outcomes or their costs are not something they might want to be highlighting as clearly for students. We see that entire industries have built up to allow schools to present information in certain ways to students, to market things in different ways. I think that that's why it's so important too to have a mode of approaching this that presents the information on an equal playing field for students to be able to process, take in, and make decisions with comparable pieces of information so that they can be seeing one set of information on one sheet of paper that looks the same and be able to really identify the points of difference across institutions and what might work best for them. That won't look the same for every student, just like not every school is offering the same value proposition, but it's important for them to have that as a resource.
Yeah, and I think, the other piece that's sort of important here to remember is SUNY and CUNY participated. New York has legislation mandating some transparency in financial aid offers. So I think that's actually a really good indication that that legislation worked and that federal legislation can work and can bring this to a broader swath of schools.
I asked Cassidy this question, and Senator Cassidy this question. I'll ask you the same version of it. I don't know if you saw the piece in the Post yesterday about the College Transparency Initiative, I think it was. And there's a lot of big systems. I mean, SUNY and CUNY are in there, and the whole Georgia system and the California state system. A lot of universities all committing to trying to, let's give some uniform information on what these A letters are like so they're comparable. I asked the senator, does that suggest that we don't need this as much, or that we actually, that's why we need it, because we only have so many on here? What would you say as to that? And I'll ask further, are there some universities or colleges who may want to do this less than others? And I'm not asking you to name names, but let's talk about broad swaths.
Sure. I would agree with what Senator Cassidy said, that this is always exciting and welcome to see institutions of their own volition wanting to share more and better information with students and prospective students who are considering their programs. But it also underscores that you'll never get a complete list that way, and that having a standardized federal way of approaching that is the best possible route to ensuring that students have information that they can compare in an apples to apples fashion. I would say yes, there would be some institutions that may be aware that their outcomes or their costs are not something they might want to be highlighting as clearly for students. We see that entire industries have built up to allow schools to present information in certain ways to students, to market things in different ways. I think that that's why it's so important too to have a mode of approaching this that presents the information on an equal playing field for students to be able to process, take in, and make decisions with comparable pieces of information, so that they can be seeing one set of information on one sheet of paper that looks the same and be able to really identify the points of difference across institutions and what might work best for them. That won't look the same for every student, just like not every school is offering the same value proposition, but it's important for them to have that as a resource.
Yeah, and I think, the other piece that's sort of important here to remember is SUNY and CUNY participated. New York has legislation mandating some transparency in financial aid offers. So I think that's actually a really good indication that that legislation worked, and that federal legislation can work and can bring this to a broader swath of schools.
So that sort of goes to the legislation might actually help grease these gears, and maybe that count of whatever it is, 360 institutions is not wholly voluntary, but sort
well, and aside, I think it's voluntary that they're participating, but they already were doing many of these things, and at the best case scenario for those 360 schools is it's like less than 10% of all the institutions we have. So if we know schools are using financial aid offers as a recruiting tool, which is what is happening at many institutions, legislation is going to be the thing that brings that into something that is understandable to students, comparable across schools, and will allow people to make informed choices about how much they're paying for these programs.
President Senator Cassidy said, he made the comparison between a mortgage offer and this. Is that an apt comparison?
Yeah, I think it's fair. I mean, if you take out a mortgage from a private bank, there is a standardized form letter that you'll get that will tell you, how much you're borrowing, what your APR is, and how much your monthly payment is expected to be. And those are mortgages that are being originated by private banks. So it just boggles my mind that we don't have a standardized form for federal student loans, which are originated by taxpayers, by the federal government. And I'm usually not a person who's, yay mandates, let's put more mandates on things. But I think that the market for higher education at the very least needs a modicum of price transparency in order to function. And I think the standards that we apply to private banks should be at the very minimum the standards that we also apply to colleges, which are using federal dollars to give loans to students.
So being a proud, I don't know if we actually carry cards, but a card-carrying member of the American Enterprise Institute, I really think competition has a lot of good benefits and could greatly benefit the higher ed sector. But as far as a competitive marketplace that functions well, we're pretty distant from that. Are these things that might actually ameliorate some of the problems with the market for undergraduate and graduate schools, that because the competition in the market right now, which we might think might lead to higher quality and lower price, I didn't hear a lot of that in the discussion either from the senator or from you.
Yeah, Yeah, so I mean, I mentioned this before, but I think the price transparency is absolutely critical. Like I said, you know, if you want to buy a new laptop, you can compare a Dell versus an Apple versus an IBM, and you can compare the different prices, the different features. You know, you can make an informed decision by comparison shopping. It's much harder to do that with colleges. And the other, you know, factor that I'll add here, which I think is less talked about, is the fact that it's actually very hard to start a new college in order to compete with the incumbent schools. You know, the number of private nonprofit colleges that exist out there today is almost the exact same as it was in 1990, even though there are 40% more college students today. And so I think that kind of shows a market where there are very high barriers to entry, where, you know, folks who have a good idea for a way to deliver education at a lower rate, lower price, potentially more efficiently, which is a better deal for students, they're facing barriers which make it difficult for them to come into the market and compete with the incumbents. As a result, the incumbent schools get to just jack up prices and get away with all this stuff that we've been talking about on stage here for the past half hour. So I think that's another feature of the market that we kind of need to be talking about a bit, is that it's not just the price opacity, it's also these barriers to entry. And when you have non-transparent prices and you don't have free entry of firms, that's not a competitive market by any stretch of the imagination.
So I'll add one other thing. Frequently, I'll get the question, you know, why doesn't Congress act on higher education, and why don't they get the schools to have some skin in the game? And I often say, well, you know, in a lot of states, the university system is the largest employer, so that is a pretty big impediment to changes that the universities don't, or at least the state systems don't want to happen. When you look at this package, I'm actually hearing not a lot of, you know, oh, well, there's this huge fundamental flaw in these bills. So I'm wondering, where does the opposition that is likely to come for some of these measures likely to be grounded? Is it just, well, they just don't know, or you just can't muster up enough concern about this to get Congress to act, or are there sort of entities willing to oppose these measures, and where might that come from?
I think institutions will have lots and lots of concerns about these things if and when legislation does look like it's moving. You know, I think we've seen institutions, even ones that are pro-transparency, have argued, well, not that kind of transparency. I'd like the metric to look like this. I think we've seen, you know, institutions saying, well, my programs that I'm offering aren't necessarily designed to lead to good jobs. They're designed to provide social value, and they're designed to provide for good and engaged citizens, and all of those things are important. But when you're setting a baseline measure, I think it's completely appropriate to look to things that are measurable and things that students care about and things that taxpayers care about in that. So that's where I would anticipate seeing lots and lots of pushback from institutions.
I agree with that, and would also say graduate schools in particular, graduate programs and associations that represent graduate institutions, because of the vastly unregulated higher education space, that's been the least oversight in terms of graduate costs and outcomes. So I think as that conversation continues to bubble up and get some steam as we kind of debate what the best potential solutions to that be in terms of curbing costs and making sure that graduate programs provide value, there will be a lot of pressure and increasing attention on that space in particular.
I also want to add that I think one of the political advantages of this bill is that the accountability measures we've been talking about, you know, the earnings thresholds, they're not applied at the institution level, they're applied at the program level. So that you can have a college, you know, maybe most of its programs pass, but a couple of its programs fail, and they say, okay, well, we have to either shut down these programs or we have to figure out a way to pay for them that's not the federal student loan program. That college is still going to survive in a very recognizable form. They might have to make some changes. They might have to redirect resources from the programs that are failing into programs that are serving students better. But most of the colleges are still going to survive. And I think that politically plays a lot different than actually shutting down entire colleges, which is not what this bill is going to do.
So last question for each of you. It is tough to get legislation to move at all. So aside from maybe the need for a legislative vehicle or something like that, just as far as on the merit, what do you see for the future likelihood of getting traction on this, at least interest among folks in the House and the Senate? Michelle?
I think we see interest is really there, and it's continuing to grow, especially on these pieces around transparency and the quality of information that's out there for students. We're already seeing that be a very bipartisan issue, and I think that will only continue to increase. And I'm hopeful that this package represents a real opportunity to continue to gain buy-in and drive that conversation towards moving towards legislation and solutions that can be passed, and will get to some of those accountability issues and serve students better as they move throughout the higher education system.
And I completely agree with all of that. I think College Transparency Act and Understanding the True Cost of College Act are both a long time coming and continuing to grow in support and momentum. And I do think they will pass when things pass. And I'm hopeful as well that the other pieces of accountability legislation here will, through continued discussion and continued sort of weighing the interests of students who are really concerned about the value they're getting out of higher education, I think that will continue to weigh on policymakers as they're considering these proposals.
I would echo what Michelle and Claire said, that I'm very excited that the transparency components of the package have such broad bipartisan support. And I'd also say that I would hold out hope for some of the accountability provisions to be passed into law, if only just because of cold, hard fiscal reality, that suddenly, if you're trying to find savings in the federal budget, trimming the federal student loan program to not make $200,000 loans to graduate schools, and making cutting off federal loans to programs that are leaving their students earning less than the high school graduate. Those are not just going to be good policy changes for students, but they are probably going to save taxpayers a fair amount of money. And so I think that as we do face down these huge deficits, I hope that policymakers will start looking to those not just as things to help students, but as potential cost savers as well.
Well, thanks for that. Preston, you get the last word. I'll thank again Senator Cassidy for giving of his time, and Michelle, Claire, and Preston, thanks for bringing yours. Thank you to those who watched online and who came today, and that is a wrap. Thanks very much.